Good afternoon, traders. Welcome to the Moor Analytics Afternoon Energy Podcast for June 23rd, going into the 24th. To start off with the natural gas, we left a minor bearish reversal above today. On an overall basis, we've been bearish from the break below 820.8. We've seen $6.68.6 so far. A number of other bearish calls in here. And then the break above 272.50 warranted decent strength. We saw 671 ticks of that in the previous contract. And then on June 1st, we held exhaustion with a 339.60 high and rolled over 365 ticks. That's now off hold. And then I said the break back below 327.30 now warrants decent pressure. That was in the July contract. Here we broke below, pulled back up to it, and rolled over further down to 314.20. And the Augie contract subsequently failed also and rolled down to 317.20. I maintain gap higher tomorrow. We'll leave a minor bullish reversal below in the Augie. A decent trade back above 327.30. $327.30 minus 0.4 of a tick per hour starting at 6 o'clock p.m. That'll warrant decent strength. Decent trade below 308.90 plus 0.2 of a tick per hour starting at 6 o'clock p.m. We'll project this downward at least 275 ticks. In the crude oil, kind of a quiet day. Tomorrow has a reasonable likelihood of seeing range expansion. I have been going over the overall stuff for a while, but on April 29th of 2020, we left the bullish reversal below. We've seen 115.13 from the 1537 open in the July contract. A lot of other bullish calls in here. Those are all on hold. Then the trade below 114.35 has brought in $41.87 pressure. Number of other lower time frame calls in here. And then the recent failure back below here, which was 86.66, or excuse me, 75.09, brought in $2.61 of pressure. If we break back above that line decently, which is going to come in at 75.30 plus 0.6 of a tick per hour, that's going to negate the bearishness from below it, but it will not be a line that I would lean against as a long. The maintain gap higher would be bullish short term. I would also warn we may be in the last stretch of this move down from here with possible exhaustion 71.40 and 72.70 to 69.55. And the RBOB contract, the maintain gap higher tomorrow, will leave a medium bullish reversal below. On a very overall basis, on May 5th, 2020, we left a significant bullish reversal below. That warrant of higher trade for days/weeks. We've seen $3.44.98 from that. A lot of other bullish calls in here. Then we held exhaustion at 432.60 and rolled over 266.03. A lot of other calls in here I won't get into. More recently, the break below 296.45 warranted renewed pressure. We've come off 17.17 cents before short carving back up to it and rolling over. If we were to break back above that line, which is going to come in at 294.56 plus 0.6 of a tick per hour starting at 6 o'clock p.m., that's going to warrant decent strength. In the heating oil, A maintained gap higher tomorrow is going to leave a minor bullish reversal below. Overall, in the heating oil, the trade above 763.4 in the June brought in $4.45.81 to the other upside. A lot of other bullish calls in here. Then we held exhaustion at 459.04 with a 461.29 high and rolled over $1.61.16. A number of other bearish calls in here. And just this morning we fell back down below this line at 311.06, which brought in 9.15 cents pressure, 9.55 cents pressure before short covering back up to it. If we break back above it decently, that's going to negate the short bias below it, but will not be a line. I would lean against this along again. That's going to come in at 311.28 plus 0.7 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. And the Brent tomorrow has a good likelihood of seeing range expansion. Kind of a quiet day in here. Overall, in May of 2020, we left a bullish reversal below that warned a higher trade for weeks. We've seen $112.45 from the 29.43 in the July 2020 contract. A lot of other bullish calls in here. Then the trade below 122.50 brought in $64.10 of pressure. A lot of other calls in between here. More recently, we just failed back below 79.20, which brought in 2.77 of pressure here. If we break back above that line decently, that's going to negate that bear bias from below that, but I wouldn't lean against it as a long. That comes in at 79.43 plus 0.8 of a tick per hour starting at 8 o'clock p.m. Eastern Standard Time. And the gas oil, a maintained gap higher in here would be bullish tomorrow. Actually, scratch that. Forget I said that. The gas oil, the trade above 309 brought in 1,128.5 of strength. A lot of other bullish calls in here. We held exhaustion. Or the trade below 1340.75 brought in 488.25 of pressure, warned about below. Number of other bearish calls in here. Trade below 1044.25 brought in 191.75 of pressure, and then the break below 949.90 rejects this downward 42 minimum, 295 plus maximum. So we've seen 97.4 of that so far. Decent trade below 84.05 plus 5 per hour starting at 6 o'clock p.m. We'll warrant decent pressure, but if we break below there at 8 o'clock p.m., excuse me, we break below there decently and back up through it decently, look for decent short covering to come in. And as far as the cadence is concerned tonight, the heating oil went out the strongest, the crude oil in the middle, and the RBOB the weakest of the three relative to one another. I would also note that a maintained gap lower tomorrow in the RBOB to heat is going to leave a minor bearish reversal above. A maintained gap lower in the RBOB crack will leave a minor bearish reversal above. And a maintained gap higher tomorrow in the heating oil will leave a medium bullish reversal below. Thank you for watching, and I'll see you in tomorrow's podcast.